The benchmark stock indexes suffered heavy losses and tough challenges. Despite the attempts to recoup some losses on Friday, the stock market gave in to pessimism due to the prospects of the Fed's monetary tightening. Wall Street indexes could not gain momentum in the New York pre-market and turned down. The new quarter could begin with a global risk aversion and the superiority of the US dollar and Treasuries. Investors could revise sentiment after the opening bell. The economic calendar contains some events that could change the picture. Let's sum up the results of the previous session. The Dow Jones slipped by 185 points, or 0.47%. The Nasdaq was the only index to close with gains, having grown by 0.14%. The S&P 500 shed 0.27% to close at 4,288 points. The New York pre-market was optimistic. Nevertheless, Wall Street indexes turned downward in the early trading hours. Demand for the S&P 500 remains weak. The bulls need to take hold of 4,304 points and conquer 4,332 points if they plan to do something to halt the downtrend in the near time. Once this level is captured, the index could jump to 4,357 points. If the bulls regain control over 4,382, they will assert their strengths. In a case the index goes down due to low risk appetite, the sellers will be able to enter the market at 2,068 points. If this level is broken, it will push the instrument down to 4,229 and lower to 4,202 points. The market sentiment turned sour on Friday in the light of the PCE report as the market reassessed the influence on the index over the Fed's monetary policy. The report showed that core PCE price index, excluding volatile food and energy prices, climbed by 3.5% on year in August. The index fell below 4% for the first time in more than 2 years. The PCE index is known as the Fed's preferred barometer of consumer inflation, even though the Fed has made considerable progress in taming high inflation, and there is still a long way to go until the regulator will announce the end of the cycle of rate hikes. Investors were also unnerved on Friday because of the likelihood of a government shutdown in Washington. On Monday, the major stock indexes dropped, but market sentiment could be revised later. And the key events will take place after the opening bell. Jerome Powell and Philadelphia Fed President Patrick Harker will speak at a roundtable with the employers and small business owners about efforts to prop up the economy. And later today, Cleveland Fed President Loretta Mester will speak on the outlook for the U.S. economy. A slew of economic data is on the top this week. Investors are anticipating the ISM manufacturing PMI and the U.S. non-farm payrolls. Today, the market got to know manufacturing PMIs for September for advanced global economies, and the survey in China revealed that business activity worsened again last month in industrial production and the service sector. Manufacturing PMIs for the Eurozone were also gloomy in September, though business activity was a bit stronger in France, Italy and Spain than in Germany, Europe's largest economy. The US manufacturing PMI is expected to be better than in Europe, but will remain below the threshold level of 50 points. The news from the US legislators softened fears and dampened the risk of a shutdown in the United States. On Saturday, Congress passed the bill on a temporary funding, having gained support from Democrats. The funding extension will make a positive impact on the US economy in the short term, but the government will be provided with the cash until November 17. Analysts at Goldman Sachs reckon that the risk of another shutdown in November is much less. So they believe in a progress in drafts for budget spending for the full year ahead. Yields of 10-year Treasuries grew on a Monday. Interestingly, yields of 2-year Treasuries, which best mirror expectations of a Fed's interest rates, are still 5%. As for the currency market, the US dollar tightened its grip against major currencies. Its index gained 4% before the opening bell to trade at 106.60. It's on a track to conquer a higher 10-month high of 106.84. The US dollar index completed the strongest quarterly growth in the year on the back of the hawkish Federal Reserve. The central bank could reinforce its rhetoric tonight. The Canadian dollar is also losing ground against its American rival. The USD CAD pair rose by 0.4% before the opening bell to open at 1.3636, and traders are ready to see the breakout of a resistance at 1.3673. The crypto market opened a new week on an optimistic note. Bitcoin looked the strongest rally. The crypto surpassed the round level of 28,000 in mere 15 minutes. The token traded at 28,400 in the early trading hours, 4.7% up. The intraday corridor for Bitcoin is determined between 28,350 and 28,420. If the token is able to overcome the upper border, it will be able to climb to $28,900 and $29,100. Otherwise, the price could dip to $27,500. The information background today encourages optimism. Coinbase obtained the full payment license for its operation in Singapore from the central bank of the city-state. This will allow Coinbase to offer services of digital tokens to individuals and firms in Singapore, which has become the crypto hub in Asia. 1Ag launched the 1Ag Ethereum Strategy ETF on a Monday, becoming one of the first US investment managers to bring to market a futures exchange-traded fund tied to the world's second-largest crypto asset. The newly launched fund will invest in Ethereum futures focused entirely on those traded on the Chicago Mercantile Exchange, according to the fund manager. Keep close tabs on the global financial markets on the InstaForex TV channel. Feel free to leave your comments and ask any questions. See you online tomorrow.